So in this video, I'm going to be talking about extreme price action so that you can benefit and profit from the QuantFlow dynamic software. So this is the 5-minute chart on gold live at 10:46 on the 27th of May. And we can see that the price has fallen in the last few hours. We have a beautiful down message here. And so therefore the price is moving down. So use that as your guide as to which direction the price is going to go. Now we have an up. So we are looking for ups. We are looking for buys in the market. So that's a bit of a clue as to what we're looking for. So let me just go into a bit of detail for today's move so that you can see and benefit from the QuantFlow dynamics. So there's a few points which you must understand before trading in this way. The first one is that we're looking for is strong divergence. If you understand divergence, hopefully you do. If you don't, contact me. So this red line here is telling us that the price is going up, but it should be going down. So this is the divergence that you see, and therefore the price is highly likely to react and fall. Leading indicator to tell you the price is going to go up or down. This indicator here goes in green when we have positive divergence, and we can see that the price then from after this down move moves up and goes green on this demand area. So there's another opportunity to buy there. But the fundamental key here is that it has to be combined with other factors. So in terms of this move here, or this move here during the Asian session, there's a couple of points to remember and to take into account. A sell power of 76 is very, very strong. Over 60 is very, very strong, especially if it's hitting a very important supply zone as well at the same time. So this is like a brick wall. The price cannot break through it. It's impossible. Of course, nothing's impossible. But nonetheless, if you were trading the Asian session and you saw this, then it's a good idea to go short and don't even hesitate. The other thing to understand is price cycle. The price cycle is really important in terms of where you enter, because if you entered here, is the price cycle high or is the price cycle low? Is the price cycle low? Is the price cycle low? Is the price cycle high? Is the price cycle high? Is there divergence? So all these factors help you to make an instant decision of which direction you should be going, and therefore continue that pattern. So the other thing which I bang on about a lot for years and years and years is outside bars. See that there? See how the price moves outside of this channel. If I zoom in there, you can see that there. Now at the same time, so we have a number of factors which are confirming that the price is going up at this point at midnight, just after midnight, and therefore there's going to be a reaction. For me, if I see this live, then I don't even hesitate. I will go short and put my stop above the supply zone. Okay, so I have a number of factors which are agreeing with my decision, i.e. I have massive strong divergence negative in the market. I have a sell power of 76, very, very strong. And I have an outside bar. An outside bar to me just means it's come outside the channel. In addition to that, I have a price cycle high. And so that combination gives you the power to make that instant decision. Now here's another decision which doesn't include a sell power of 76. So this is another decision that you can make. But there's a number of factors which still are valid. So not as strong as this one, I agree, because it's not in the strong supply zone, extra strong. But it has a number of factors which will help you make better decisions. So we have confirmation of negative divergence in the market. In other words, the price is going up, but there's clear divergence negative. So the price is going up, but it's highly likely to fall. And we can see that also we have an outside bar, and it's in a supply zone as well. Not as strong, I agree. However, it's good enough to make that decision because the price cycle is high as well. So the price cycle is going to give way, and then the price moves in your direction. Now, the entry point, if you can get it, is right as the price moves outside the bar at 45.14. And your stop loss is above that area here. So if you get in there, 45.15, stop loss is there, previous swing high, and 2-to-1. So extreme price action is really important to understand. Now, is this extreme price action here at this bottom here? I would say probably not, but we definitely have a slight outside bar, not as good as we'd like, but the price has sort of gone too far, really. It's moved 300 pips. If you can see a price that's moved 300 pips, there's usually a correction of some sort. So use that information. The other thing to look out for on the QuantFlow dynamics is the dot here. If you can see that, you can see that there's a dot there. So that dot doesn't appear until there's a reversal candle. So you've got a bit of a doji, then a bullish candle. So you can bank 100 pips, 150 pips during that journey as well. Now, as we talk now this morning, we don't know what's happening during the New York session. It's far too early, but the London session has been going down, and we do expect further downside possibly. But there's a few factors going on here. We have a new demand zone being created with a buy power of 74. So at this point here, what are you looking for? What are you looking for? So what we are looking for is exactly the same as before. I would hope to see an outside bar, so the price comes down into this area here, so it moves outside the channel, possibly. I need to see confirmation of positive divergence. So the price moving down, but the oscillator moving up, and then we therefore have positive divergence. And then we want to see a green candlestick fighting with this demand zone here. Now it could be taken out, and that's another decision. So if we don't get all the factors involved here with all the price action taking place at this point, now I could post often in the VIP room to buy into this area and do this, but of course we don't know what the reaction is going to be on here. So waiting for that trading setup is a good idea to be at the chart so you can analyze it and tick all the boxes. So if we have positive divergence, we have an outside bar, etc., then and then also you can wait for the red candle if you prefer. If you don't get in on the early part of this, then get in on the next red candle and just follow it down, or follow it up depending where the so here's a very good example here. So we have, it probably was on supply on demand, however that's been taken out, so it no longer exists. However, at this point here we have an up, and then we have an outside bar with divergence. So that's an excellent trading opportunity to get into it, back up into 45.07. Trying to give you all the examples. So outside bars are fantastic. Look at this. Negative divergence, outside bar, price falls. Positive divergence, outside the channel, price moves up. Here, 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 and slightly here. So it's a really good example of extreme price action that you can use and you can benefit, but make sure the three fundamentals are there: positive or negative divergence, double bottoms or double tops are really useful as well, outside bars, and then price cycle. So just make sure those three combinations are in play at that time so that you can get the best chance of great success in gold. But if you get it right, you can make a lot of money.